Hello, guys, and welcome. It's Spectre Trader, and today we're going to go over the basics of the footprint chart. So, first off, why do we use a footprint chart as opposed to the regular candlestick chart? Well, it goes beyond just telling you what the current price is. It's very much like a microscopic view in a sense where you can see the inner workings of the candlesticks. It basically tells you what's going on in each candlestick on the price chart. Each bar displays not only price, but volume and order flow as well. That way, you're able to see how buyers and sellers are reacting to the current price, as well as who is winning. So, are we in a buyer's or seller's market? And additionally, for the footprint chart, is what we like to call an all in one. It consists of volume, time, relative market changes, order flow, and of course, price. Next slide. So this is an example of the footprint chart. Looks a little blurry, but let me know if you guys can see that. Okay. Shoot. You guys could see like you guys could distinguish between the red and the white numbers, right? I mean,
Yes.
that's all really that matters. Okay. Okay. That's fine. That's fine. All right. So, okay, let's break down how the chart is set up. As you can see, price is. Well, okay, I'll do a little screenshot of my live chart. Then everyone could see it, I think. All right. One second. Okay, I did a little screenshot right here. See, this is my live footprint chart. Yeah, like I was saying, price is displayed on the vertical axis. So on the y-axis, we have price displayed here. On the horizontal axis, we have time. So as you can see, we have each time period so each bar is a 5-minute candle. You see 8:45, 8:50, 8:55, 9, etc., etc. So yeah, basically each footprint bar is a 5-minute candle, and each cell has 2 numbers represented. As you can see, each cell is aligned with price at the current price, and it tells you bid and ask. So yeah, each cell has 2 numbers represented. The lots sold on the bid. So the lots sold on the bid. Okay, that's the bid. And then the lots bought on the ask, which is on this side. Oops, but lopsided. This means that you're not only able to see the actual volume of contracts sold at the exact price level, but you're able to see where they're being filled. Are they being taken at the bid or the ask? To understand this, you must first understand that price moves diagonally on the footprint. So what I mean by diagonal is we would compare the bid and the ask. Bid and the ask. So it would be diagonal as in like this, you know? It's not side to side, but we'll be comparing each bid and ask diagonally, right? So There's something called a sell imbalance, a buy imbalance. Generally, I'll go more into this in a few more slides, but generally, I have my charts set to 4 times. So if the value is about 4 times greater than what it's being compared to, that would cause a sell imbalance. If the value is 4 times greater on the buy side, that would cause a buy imbalance. All right. Let me see. Next slide. Okay, now let's go into the concept of delta. Delta is basically the difference between the ask and the bid. It tells us who is in control at the very moment. So, for example, if at 9 a.m. we have 500 contracts taken on the ask and 400 contracts taken on the bid, the delta will be plus 100. And it'll be vice versa. So if there's 400 contracts taken on the ask and 500 contracts taken on the bid, the delta will be negative 100. Yeah. So delta is represented on my chart right down here. So we have a little graph right here. This is delta, and it represents each delta at each 5-minute candle. So right on this candle at 850, the delta is negative 515. On this candle at 855, the delta is negative 72. And on this candle, delta is plus 638. So yeah, as you can see, delta here is displayed on a statistics chart at the bottom of a chart. It tells us it tells us if we're negative or positive by the red numbers and the little minus sign, and if we're positive by the green. If the prices are okay, so for example, if the prices are dropping, but the delta is staying positive, then that means buyers are providing liquidity to the sellers since a majority of transactions are taking place on the ask. So as a trader, if I saw some sort of delta divergence like this, it hints at the idea that somebody is absorbing and that you could have a bounce in the near term. This is also known as buyers providing liquidity. So normally when price decreases, that would mean that the majority of transactions are being held on the bid, aka it's a seller's market and buyers are being stopped out. But however, in this example that I explained, the majority of transactions are being held on the ask. So this is only possible if there's a good amount of buyers providing liquidity at the higher prices. Next slide. So this brings us to the next point. I talked about imbalances a little bit briefly before, but now I'm going to go more into detail about imbalances. So what an imbalance is, an imbalance is basically it indicates that who's in control of the market at the current time. So whether the buyers or sellers are in control. So there are 2 types of imbalances: buying imbalances and selling imbalances. A selling imbalance is highlighted in red. So if you look at the picture on the right side, you see a bunch of sell imbalances. So it shows that sellers are in control at the current time, and the majority of transactions held at the time are on the bid. A buy imbalance would be highlighted in green, be on the right side, and you'll see a bunch of green numbers. So when you have a buy imbalance, this means that buyers are in control and the majority of the transactions are held on the offer. So if we were to have a buy imbalance, it's quantified by 4 times more contracts being bought on the ask as opposed to lots being sold on the bid. So vice versa for a selling imbalance. So you'll have 4 times more lots sold on the bid and as opposed to lots bought on the ask. So this exact multiple of 4 times is what we use in my Sierra charts parameter. So yeah, the next components I go over are resting bids and offers. It's at the next slide. Oh, wait. Hang on, let me get a little screenshot and I'll show you a little example of a resting order. Here we go. Let me get a screenshot of this. This example is from Wednesday, March 17. Okay. So the next component I'm going to talk about is resting bids and offers. So the resting bids and offers are resting orders, so limit orders, being ready or being awaiting to be hit above the current market price, right? So on the footprint chart, you see in each cell, these are the contracts being executed at the market price. But the resting orders are orders being waited to be filled above the market price or below the market price, and they're basically limit orders. So these pink cells represent limit sell orders waiting to be executed. And something like this blue order, it would be down here at if it hasn't already been hit, it would be around this area because it hasn't been hit yet. So in the past, if it's already hit, it will appear here, but it would no longer be active. So as you can see, this cell, these resting orders are active currently, but this blue buy orders have already been hit. So yeah, so resting buy orders would be located below the current market price, and it'll be represented by these blue boxes. And basically, they represent orders that have not been hit and they're waiting to be hit on the buy side. So how we would play it is if let's just say price is moving up and we want to fade it. So we want to do a reversal. When we play reversal on it, if we come up to this price and we see a bunch of pink sell orders, resting orders waiting to be hit, we could front run it, place our orders ahead of it, and we could have a stop loss right behind it in case the sell orders do not cause a reversal. So yeah, the last component of footprint chart I want to discuss basically is price. So I did go over this a little bit before, but yeah, so price is represented on the right side, and for each 5-minute time frame, you're able to see the high, the low, the open, and the close. So each high of the candle will be the highest point filled by the bid and ask, and the lowest point will be filled with bid and asks. And open and close will be shown by as the filled bars on the left-hand side of the bid and ask. So if it closes below or above, that will be represented by these little lines. Next slide. All right. I'm not sure if this is super clear, but this is an example of a breakdown in the market. If you look at the imbalances on this Wednesday at 8:40, so right here on this 5-minute candle is 8:40. We see a bunch of red numbers, right? So that shows that we have a bunch of sell imbalances, which mean the sellers are being aggressive as shown by the imbalances. And this tells us that the sellers are not waiting for the buyers to hit the bid, and no one is willing to buy at the current moment. But something very important to note is that we did not have any follow through to the downside, right? We finished the auction right here by this. Yeah, as you can see, we finished the auction. It's 34/0. We finished business, and then we actually absorbed a lot of these sellers, right? Because you see, it gets super heavy with 4-digit numbers, but we did not have any follow through, which means that there was somebody on the other side actually buying at these lower prices and absorbing all the sellers. So the bid got heavy with a lot of sellers, but if you're able to observe this nuance, you could actually fade this off of this. This yellow line is VWAP, by the way, so you can fade it off of VWAP, and you can see the next candle. We have a pretty nice bounce, and we actually push higher above the previous 5-minute candle. So what this was telling us is that we had some stops being hit, but it was not any real selling. So it hit the stops, it absorbed all the sellers, and we had a pretty nice reversal. All right, so next slide. Yeah. So because Footprint displays order flow and various interactions in the market, we're able to pull patterns and trends from this. So in doing so, we are no longer reliant on retail indicators. Let's just, like RSI MACD, everyone uses it, but it, it and you could still use RSI MACD to give you an edge, but using a footprint chart, I would say it's another level where you could see a more detailed data and more detailed quantitative data, and that could give you an edge if you could interpret it correctly and capitalize on that what you see. The footprint chart is basically a relative indicator. It tells you the relative changes, the nuance shifts, and it precisely tells you a shift from a low volume algo interaction. So you might see some chop, like a really tight sideways day where it's just algos playing the market and not much delta. But when the shift comes, you can see nuances that, we're changing to a new dynamic. So it could be a low volume sideways day, and then all of a sudden you see some volume coming. You see some big buyers coming in. That will show you that we have a new dynamic, and we could potentially start trending up. And that's what the footprint will basically tell you, is like what's happening behind the scenes. Finally, the last and final point of this slide, the footprint allows you to make entries big players. So it basically allows you to see where everyone is positioned, whether it's retail or big players absorbing or selling. But yeah, so for example, let's just say I want to against 3090, 3090. So if I see a large quantity of offers being stacked against 3090 and more offers, resting offers stacked above at 3090.25 and 3090.5, that will give me more confidence in the short because you see a bunch of stacked resting orders ready to be hit. So with this strategy, it basically tells you where there is liquidity, and it allows you to ride high velocity to your advantage. All right, next slide. So yeah, this is the final slide. So yeah, for example, let's identify a support level based on various factors, and the price has come down to the support level. We want to provide liquidity to the market when the price drops to the support level, and we place an order. So we assume that we are making an assumption that everybody else wants to buy and provide liquidity, but the reason why the footprint is so important is because it tells us if there's any big players being involved and also want to provide liquidity. Because you could draw lines on a chart and say this is a resistance level, but how do we know if it's support and resistance, right? The footprint gives you an active look at whether or not these support and resistance levels are actually active. You see, yeah, let's just say we get to this price level that I want to buy at, and there's no one providing liquidity there. I would not. I mean, it'd be a bad idea to go long at that level because that's just there's no conviction. There's no one supporting that level. So yeah, this is why we this is why we use a footprint chart, so we could have an edge and we could see. And we're not just gambling here, but we could actually see what's really going on. So yeah, one more thing that is a very key principle to know is when price moves, it always brings new participants. So the more aggressive price moves, the more it would bring larger time participants. So if we're moving on low volume, you can expect the auction to reverse as low volume cannot continue trend into exhaustion, and we can see that on the footprint chart. But when we have a strong auction on high volume, we could expect to continue trending. So if we have big buyers coming in, then obviously the footprint chart will tell us that is happening, and we could, if we're long, we could continue holding long for a continuation of trend. So yeah, that's pretty much it with my presentation. Is there any questions? I guess we'll have a little Q&A session before we close. Anyone?
Nope.
All right. I think, yeah, I think that's pretty much it for today.